Hi friends, today I decided to do this session in English. Anyway, today I am going to talk about cash flow statement. I'll start from direct method. In this case, first of all, I have to say when you learn investing, you can't learn it without learning English because most of the investment books, investment literature is written by in English language. So even it is difficult. Even I also face big difficulties in when I am starting this to read annual reports and to read investment books. But you have to learn this, otherwise there is no point of doing this because everything good about English sorry about investing is written in English language. Anyway, this is a cash flow statement. I have extracted this from internet. uh, Anyway, this is a direct method cash flow statement. So there is a similarity between direct method and indirect method. The similarity is this cash flow from investing activities and cash flow from financing activities. The extraction method of this both is uh, similar in indirect and direct method. It is the similarity. If you see indirect cash flow, even if you see direct cash flow, both are similar. The problem is in Sri Lanka, cash flow statement is normally in our annual reports in CST, cash flow statements are normally prepared in English language. So it is a little bit difficult thing. Normally people who did their A levels in English language, these are simple things, but those who those who did their A levels in commerce, these are simple things, not English language. Because in accounting, A level accounting, this indirect method is simplified than explained. So let's first study the direct method. In here uh, we can see cash flow from operating activities. It consists from cash receipt from customers, cash receipt from suppliers. I am teaching you this direct method because you can't understand indirect method without learning the direct method. That's the problem. Cash paid to suppliers, cash from customers, cash paid to suppliers. You can see the minus sign. Cash paid to employees, interest paid, income taxes paid, and net cash from operating activities. Now this figure is the figure that we want to arrive from this indirect method, and you can see everything is suggested that net increase or decrease in cash is taken finally at the this cash flow statement. Anyway, we will start this. Now this is a sorry. Now you can see the basic method of preparation of indirect method cash flow statement. You can see this normally in CSC website. In this end of this video, I will take Royal Ceramic cash flow statement and I explain it to you. There are some secrets in that Royal Ceramic latest quarterly finance statement. I will explain that also. You can see we have to get the net profit at the beginning. Uh, the meaning of the cash flow, we have to derive the net cash flow from operating activities. That is the final output of this analyzing the cash flow. uh, Anyway, this is the method of investing of Warren Buffett. Warren Buffett have clearly mentioned this in the security analyst book. Warren Buffett is a student of Ben Graham, who is the student of Ben Graham. So in the Ben Graham's book, the method of owner's earning is explained. Uh, in here you can see net cash flow from operating activities. What's the important of this is you have to deduct the deduct some real expenditures from this, and you have to arrive the owner's earnings. That's the main thing. I told you that I will do a session on acquires multiple, so this is the beginning of it. You can't do acquires multiple without understanding these simple things. So importance of this is you can't take EPS. So you may be thinking what we learned in past videos are incorrect. You are correct, because you can't take much quality details from EPS, because EPS can be manipulated easily. It will be sometimes automatically manipulated because of some accounting adjustments, because of depreciation and amortization and such kind of things. This EPS figure is manipulated. So what is the remedy is, you have to take the net cash flow from operation activities, and you have to deduct some expenditures for maintenance, capex maintenance and such kind, and you can get the operation earnings and owner's earnings. This is the correct figure. So you have to check, you don't check the PE ratio here. After, you have to take the acquires multiple. When taking the acquires multiple, you have to take this, you have to do this kind of calculation, because that is the most correct way. You can I will show finally the RCL annual report, and you can understand this clearly. Anyway, now you can see, now this net profit is not a cash thing. The net profit is subject to the accounting adjustments. That means depreciation, amortization, those kind of things. Depreciation, now you are thinking, what is depreciation? Depreciation is concept like this. Depreciation is basically, let's say you buy a building to use for your business. So let's say building price is 20 lakh. So you have to understand that this building can be used for 20 years. So 20 divided by 20, 1 lakh per year. What happen if you deduct this 20 lakh as an expense in this year? So if your revenue, you say 10 lakh, and if you deduct this 20 lakh, you will have loss of 10 lakh. Because of this deficiency, we will not deduct this 10 lakh from here. This is wrong. We will deduct this 1 lakh. 10 minus 1 equals 9. This is the concept of depreciation. Those who understand, I will tell again. Let's say you buy a building for your business. It is unfair to deduct this whole cost as a expense. So profit will be manipulated because of that. So you will deduct, let's say this you will be deducting this building expense on the period of its usable lifetime. So you have you will only deduct 1 lakh per year. That is the basic concept of depreciation. So depreciation is a non-cash expense. So these non-cash expenses are added to net profit. That is the thing. Non-cash expenses are added. The amortization is also work as depreciation, so it is added. So you can see the gain loss on sale of non-current assets. This is a gain. It will be deducted. It is a loss. It will be added. That is the basic scenario. And I will explain with this practical numbers so you can understand properly. Adjust for movement in working capital. Now you can see increase, decrease in inventory. If the inventory figure, let's say 2090 to 2020, we will clear this first, otherwise you can't understand. Let's say you have to take let's say 2019 to 2020. Let's say your inventory figure is increase. Inventory have increase. So increase in inventory you have to deduct. Decrease in inventory you have to add. The reason is when you calculate in profit, this inventory figure is taken. Let's say increase in inventory figure is taken as profit. That's the thing. Increase in inventory figure is taken in as profit and added to this. So you have to deduct it. So that's the basic reason behind it. Okay, then increase, decrease in receivables. Then also you have to If increase in receivables, you have to deduct. Decrease in receivables, you have to add. The reason is receivables means you can sell without having money. You can sell for uh, debtors. So that is an item economy. So we will sell uh, we'll sell we'll have money later. So this receivables increase means these things are included in the sale. Okay, so we have to that is the reason the profit is manipulated because of this. So we have to, if we want to take the cash profit, you have to deduct the increase in receivables and decrease in receivables. If there is decrease in receivables, you have to add. That is the basic thing. This payables means inverse side of the receivables. So increase in payables you have to add, and decrease in payables you have to deduct. There's a basic theory behind this. Anyway, you after this adjustments, you can take net cash flow from operating activities like this, and you can arrive this figure. That this is the most important figure when we consider investment. Now we'll move into practical example. Now I want to show you a practical example how these numbers are derived. Let's say this is a cash flow statement which is prepared based on the indirect method. Okay, this is indirect because normally all the expenses are not taken, and the adjustment taken from net profit to arrive the net cash flow from operating activities. Now how this net profit is taken in the cash flow, where you may be imagining, because you can see various annual reports in this end of this lecture. I will do a Royal Ceramic, I will take Royal Ceramic annual report, and I will show you some special point you have to consider when analyzing this finance statement. Sometimes you may be misled because of these things. Anyway, you have to first get the when you prepare the cash flow statement indirect method. Now I am doing the operational cash flow side. Okay, now when you prepare the operational cash flow from operating activities, you have to take the net profit. We can take the net profit from where? We can take the net profit from income statement. You can see we have to take the calculator. No need to calculator. Now you can see this divided by this 90, 190, and 190 deducted these things 87. 87 divide reduce 8 by 79. 79 divide 9, 70. So net income is 70, and we will take this into this formula. So this number in the cash flow is derived from net profit. You can see the net profit figure. Okay, you can see this is the net profit figure 70. This is directly taken to the indirect cash flow statement. Okay, then we will think how they take the depreciation. That also taken by income statement. Income statement, you can see depreciation. This is non-cash expense. So this we have to add because it is a non-cash expense. Very easy. It's not very hard. When you see few annual report, this become very easy. Okay, next you have to adjust for movements in working capital. Now you have to adjust the decrease or increase in inventory. So we'll see the balance sheet, and we'll see in inventories decrease or increase. Now you can see inventory is clearly increased. You can see 68 to 94. What is the difference? 78, 88, 94, 26. It's simple. 26 is taken. Then decrease in receivables. We will see the receivables also. You can see now account receivable. Account receivable, you can see increase. Account receivable also increase 98 to 120, 22. Very simple. Very simple. Now 22. Now again you have to adjust the increase decrease in payables. 25. Let's see what happened. Now payables, there are 4 types of payables. So you have to take this all together to calculate the correct figure. if you total this and total this, it's a 95 plus 30, how much? 135. 135 plus 6 is 141. Then 105 plus 42, 45. 150, 156. It is correct. No, 95 plus 30, 195 plus 30, 125, no? 25. Then 125 and 6, 131. 131, now 6 minus 1, 5. 5 minus 3 is 25. Let's see, is it 25? Yeah, you can see 25. It's easy. Now you have to adjust this all, and you can take this 70 by deducting and adjusting all. This is very easy. This is the method of calculating the what? Indirect method, cash flow. Now cash flow is not a secret, not a secret anymore. Okay, now we will move into Royal Ceramic annual report, and I will explain what happened there. Okay, this is the Royal Ceramic quarterly financial statement, latest one. Now you can see the earnings per share is minus. So you can see company, you can see from the financial statement, the performance of the company is deteriorating. It means reducing. But is this truth? Is the problem? So I tell you, this is not the truth. This Royal Ceramic financial performance is increasing, because I can tell you this with proof. Okay, now proof is, we can go to the what? Cash flow statement. Now you know, now you understand the cash flow statement. If you don't understand, please check it again, my video. Okay, now you can see this is the loss they have taken, 59,004. Let's say this is the loss, basic loss. There should be some this is, here is this. Now 59,004 they have taken that to the beginning of the cash flow statement. So last year 151. So you can see here, when you see the profit and loss statement, if you take the PE, I am telling you it is incorrect because of these reasons. Now you can see they had a dividend in 2019. Now 2020 no dividend. No, there may be dividend, but this quarter there may be no dividend. That's the reason. So that is the very big figure. Let's say if you adjusted, let's say if you adjusted this to the profit will become a loss. The loss will become to a profit. So this figure is very important. You can see these financials are, I don't say this is manipulated, but misleading the viewer. Viewer may be thinking this company's performance is deteriorating, and this company is going to hell, but the reality is it's not the reason, because this dividend is not taken in 2020 figure. The main thing, if dividend came here also, there may be a impact. And again I am telling you, the depreciation is increased, so it should be plus. Okay, depreciation also there is a impact for this year because it's increased. So we have to find out what is the reasons for this. Anyway, now finance cost is reduced. If you can go below in this statement, you can see finance cost. What is the finance expenditure? You can see finance expenses is 207 in finance statement. So now in here you can see that is taken 207 882, and it is added to the cash because it's a non-cash thing. You can see they have reduced this in it should be reduced. What is paid for finance? Now you can see it in it's in here, finance cost paid thing is got in here, this thing is deducted, so there is also a big difference, so that also a impact to the our cash profit. So you can see even that two adjustment is done, this will become plus. That is the main reason. You can see in here net cash from using operations is increased in compared to 2019, so it's not the company performance is increasing, so that's the thing. And again you can see what is the most important thing. Let's say the inventory figure. Now last year the inventory figure is increase in inventories last year. Now in here 2020 decrease in inventories. What it means? It means company is doing sales properly. Now the tiles are selling. Now last year tiles are accumulated in the warehouses. Now in this year tiles are started to see very positive sign. You can see this. And again decrease in trade and other receivables. It's you can see similar very close figures, but now you can see trade and other payables. So there is a decrease. Decrease is low. That means they have now so even they have settled their payables, because decrease the decrease in payables is deducted in here, so decrease amount is low. That means last year they have paid payables more. Anyway, the current liabilities figure also uh, increased, so that's not very good anyway. Now in here you can see this year clearly this is a positive sign, the inventory becoming cash. So when you what happen if you think now the problem is, I will take the paint and explain you. Now when you check the when you check the profit and loss, this is the most important lesson in this series. If you watch this properly, this will be very important. When you check the profit and loss, it gives the impression to the viewer 2020 profit and loss PE ratio. Okay, I told you this is wrong. Okay, 2020 2019. Now PE ratio shows this is reduced, the performance is bad, becoming bad. But when you see the cash flow statements, you can see what the performance is increasing, performance is good, becoming good, because inventory is good, inventory is becoming to the cash. So operational owners earnings are there, owners earnings are there. So from these two, what we have to consider, what is more reliable, what is the most reliable? If you check all my past 300 videos, you will have the answer. Most reliable thing is cash flow. So you have to go from the cash flow. So this is the most important thing. You have to take the operation cash flow in and invest in and financing cash flows, and all you have to check that. And operation cash flows, you have to deduct the maintenance expenditures and some capex related maintenance expenditures. So then only you can take the owner's earnings and you can calculate our acquirers multiple. Very simple. If you took the PE ratio, what it is wrong. Anyway, new subscribers, please join us, and please press the bell icon. And I'm thinking to move into English, so I'm also forgetting English because I'm always speaking Sinhala. Because anyway, if you want to really learn investing, you have to learn English properly. Otherwise, it doesn't help. Anyway, good luck.